4 popular monthly dividend stocks with yields up to 20%. This video will look at popular high-yield monthly dividend stocks. We'll go through the research, so you can decide if it's a buy, hold or pass. Monthly dividend stocks are securities that pay high dividends more often. A more regular dividend payment means a steadier stream of income for investors. Monthly dividend stocks are generally better because they allow you to use compounding more regularly. More frequent compounding means your investment returns will grow faster, especially in the long run, which matters most. Over the long run, investments that compound monthly generate higher returns than those in which interest compounds quarterly. A little bit of extra time can make a big difference. Investors should be cautious when investing in monthly dividend stocks as they usually have higher payout ratios with volatile payouts. An elevated payout ratio means there's less room for error when maintaining the dividend if business results suffer a temporary, or permanent, decline. This can lead management teams to leverage their balance sheet, fueling growth with debt aggressively. High debt and a high payout ratio may be the most dangerous combination for a potential future dividend reduction. The following companies represent 4 popular monthly dividend stocks. Number 4, Broadmark Realty Capital, ticker BRMK. Broadmark Realty Capital Incorporated is an internally managed real estate investment trust. It provides financing to real estate investors and developers across multiple regions throughout the United States. Looking at the daily chart, we can see that we currently have over a 40% discount over the trailing 12 months. Zacks Research ranks Broadmark as a 3-hold with an overall VGM score of D. Looking at tip ranks, they score Broadmark with a 1, which is considered an underperform. Based on 5 Wall Street analysts offering 12-month price targets for Broadmark Realty Capital in the last 3 months, the average price target is $6.50, with a high forecast of $7.50 and a low forecast of $5.50. The average price target represents a 24.28% change from the last price of $5.23. Broadmark Realty Capital's market cap is currently $681.89 million. The company's earnings per share trailing 12 months is 44 cents. Its PE ratio is 11.59, and it has a dividend yield of 17.07%. Broadmark Realty Capital is scheduled to report earnings on March 15, 2023, and the estimated EPS forecast is 16 cents. Last quarter, Q3 2022, Broadmark Realty Capital's total revenue was $27.13 million, a decrease of 11.33% from the previous quarter. In Q3, Broadmark Realty Capital's net income was $2.61 million. Their total assets for Q3 2022 were $1.23 billion, a decrease of -1.69% from the previous quarter. Their total liabilities were $128.26 million for the fiscal quarter, a 2.35% decrease from the last quarter. Their free cash flow for Q3 2022 was $15.64 million. For the 2022 fiscal year, their free cash flow decreased by $149,000, and their operating cash flow was $15.65 million. Broadmark's annual dividend rate is 17.07%, with an overall payout ratio of 137.7%. Over the past year, earnings per share were 44 cents, and their annual dividend per share was 84 cents. This is why they have a payout ratio of 137.7%, which is not sustainable at the current rate. But if their dividend can sustain the current rate, let's plug this number into the dividend calculator. Plugging this number into the dividend calculator, buying 500 shares with no additional contribution, and reinvesting the dividends in the DRIP strategy, we can see that holding for 10 years, we have an ending balance of $2,262, a total return of 432%, and annual dividend income of $428.95, off of a $2,617.50 investment. Looking at investor sentiment, investors are overall optimistic about Broadmark Realty. Based on the 13F filings of 462 hedge funds submitted to the SEC, hedge funds decreased holdings by 4.1 million shares last quarter. Broadmark's blogger sentiment is based on 9 blogger opinions. The blogger sentiment is more bullish than other stocks in the financial sector. Public companies must disclose risks affecting the business and the stock. These disclosures are known as risk factors. Companies disclose these risks in their yearly, Form 10-K, and quarterly earnings, Form 10-Q, reports. Broadmark Realty Capital disclosed 71 risk factors in its most recent earnings report. Broadmark Realty Capital reported the most risks in the finance and corporate category. Let me know in the comments what you think. Number 3, Armor Residential REIT, ticker ARR. Armor Residential REIT Incorporated operates as a real estate investment trust which invests in fixed rate, hybrid adjustable rate, and adjustable rate residential mortgage-backed securities. Looking at the daily chart, we can see that we currently have over a 30% discount over the trailing 12 months. Zacks Research ranks Armor as a 2 buy with an overall VGM score of C. Tip ranks scores Armor with a 6, which is neutral. Based on 3 Wall Street analysts offering 12-month price targets for Armor Residential REIT in the last 3 months, the average price target is $5.75, with a high forecast of $6 and a low forecast of $5.50. The average price target represents a minus 5.58% change from the last price of $6.09. Armor Residential's market cap is currently $783.59 million. The company's earnings per share trailing 12 months is negative $2.75. Its PE ratio is negative 2.15, and it has a dividend yield of 21.70%. Armor Residential is scheduled to report earnings on February 14, 2023, and the estimated EPS forecast is 30 cents. Last quarter, Q3 2022, their total revenue was negative $139 million, a decrease of minus 497.42% from the previous quarter. In Q3, Armor Residential's net income was negative $147.3 million. The total assets for Q3 2022 were $10.92 billion, an increase of 23.24% from the previous quarter. Their total liabilities were $9.97 billion for the fiscal quarter, a 26.47% decrease from the last quarter. Armor's free cash flow for Q3 2022 was $90.43 million. For the 2022 fiscal year, their free cash flow decreased by $269.56 million. Armor's annual dividend rate is 21.7%, with a payout ratio of 103.45%, which is not sustainable at the current rate. Over the past year, earnings per share were negative $2.75, and their annual dividend per share is $1.20. This is why it currently isn't sustainable. Let's plug this dividend number into the calculator to see what kind of return we could see over 10 years. By buying 500 shares with no additional contribution and reinvesting the dividends in the DRIP strategy, we can see that holding for 10 years, we have an ending balance of $25,193, a total return of 727.38%, and an annual dividend income of $4,798.78, off of a $3,045 investment. Looking at investor sentiment, investors are overall optimistic about Armor Residential. Based on the 13F filings of 462 hedge funds submitted, hedge funds decreased holdings by 396.6 thousand shares last quarter. Armor's blogger sentiment, based on 3 blogger opinions, is more bullish than other stocks in the financial sector. Armor Residential REIT disclosed 66 risk factors in its most recent earnings report. Armor Residential reported more risks than others in the finance and corporate category. Let me know in the comments what your thoughts are about a 700% return if it can continue its 10-cent monthly dividend run for the next 10 years. Number 2, SL Green Realty, ticker SLG. SL Green Realty Corporation operates as a real estate investment trust. The firm engages in the acquisition, development, ownership, management and operation of commercial and residential real estate properties. Looking at the daily chart, we can see that we currently have over a 40% discount over the trailing 12 months. Zacks Research ranks SL Green as a 3-hold with an overall VGM score of D. Tip ranks scores SL Green with a 6, neutral. Based on 10 Wall Street analysts offering 12-month price targets for SL Green Realty in the last 3 months, the average price target is $49.60, with a high forecast of $84 and a low forecast of $38. The average price target represents a 19.58% change from the last price of $41.48. SL Green Realty's market cap is currently $2.73 billion. The company's earnings per share trailing 12 months is a negative $1.29. Its PE ratio is negative 31.21, and it has a dividend yield of 10.09%. SL Green Realty is scheduled to report earnings on January 24, 2023, and the estimated EPS forecast is negative 6 cents. Last quarter, Q3 2022, SL Green Realty's total revenue was $212.46 million, an increase of 3.54% from the same quarter the previous year. In Q3, SL Green Realty's net income was $7.38 million. SL Green Realty's total assets for Q3 2022 were $12.72 billion, an increase of 18.79% from the previous quarter. SLG's total liabilities were $7.49 billion for the fiscal quarter, a 37.64% decrease from the last quarter. SLG's free cash flow for Q3 2022 was $67.19 million. For the 2022 fiscal year, SLG's free cash flow decreased by minus $298.26 million, and operating cash flow was $67.19 million. Now, This is interesting. SLG's monthly dividend is 31 cents, making an annual dividend rate of 10.09% with a payout ratio of negative 479.77%, which is not sustainable. SLG's past year's earnings per share were negative $1.30, and their annual dividend per share is $6.24. This is how the negative 479% payout ratio was calculated, paying $6.24 per share and making a negative $1.30. Looking at the dividend calculator, buying 100 shares with no additional contribution and reinvesting the dividends in the DRIP strategy, we can see that holding for 10 years, we have an ending balance of $11,235, a total return of 170% and an annual dividend income of $1,065.66, off of a $4,148 investment. Looking at investor sentiment, investors have a favorable view of SL Green. Based on the activity of hedge funds in the recent quarter, they increased holdings by 126.4 thousand shares last quarter. Based on 8 blogger opinions, SLG blogger sentiment is more bullish than other stocks in the financial sector. SL Green Realty disclosed 38 risk factors in its most recent earnings report. SL Green Realty reported higher risks than others in the finance and corporate category. Number 1, AGNC Investment Corp., ticker AGNC. AGNC Investment Corporation operates as a real estate investment trust. It primarily invests in agency residential mortgage-backed securities on a leveraged basis. Looking at the daily chart, we can see that we currently have a 30% discount over the trailing 12 months. Zacks Research ranks AGNC as a 1 strong buy with an overall VGM score of D. Tip Rank scores AGNC with a 7, neutral. Based on 6 Wall Street analysts offering 12-month price targets for AGNC investment in the last 3 months, the average price target is $9.17, with a high forecast of $10 and a low forecast of $9. The average price target represents a minus 4.78% change from the last price of $9.63. AGNC Investment's market cap is currently $5.4 billion. The company's earnings per share trailing 12 months is negative $3.56. Its PE ratio is negative 2.65, and it has a dividend yield of 16.70%. AGNC Investment is scheduled to report earnings on January 31, 2023, and the estimated EPS forecast is 64 cents. Last quarter, Q3 2022, AGNC Investment's total revenue was negative $647 million, a decrease of 376.50% from the same quarter the previous year. In Q3, AGNC Investment's net income was negative $692 million. AGNC Investment's total assets for Q3 2022 were $58.52 billion, a decrease of negative 4.44% from the previous quarter. AGNC's total liabilities were $51.3 billion for the fiscal quarter, a negative 3.57% decrease from the last quarter. AGNC's free cash flow for Q3 2022 was $226 million. For the 2022 fiscal year, AGNC's free cash flow decreased by $207 million, and its operating cash flow was $226 million. AGNC's monthly dividend is 12 cents, making an annual dividend rate of 16.7% with a payout ratio of 45.48%, which is sustainable. Plugging the numbers into the dividend calculator, buying 500 shares with no additional contribution, and reinvesting the dividends in the DRIP strategy, we can see that holding for 10 years, we have an ending balance of $24,736, a total return of 413%, and an annual dividend income of $3,734.43, off of a $4,815 investment. Looking at sentiment indicators, investors have a favorable view of AGNC Investments. The analysis also concluded that investors between 35 to 55 are the most significant shareholders of AGNC stock. Hedge funds decreased holdings by 2.6 million shares last quarter. AGNC blogger sentiment is based on 14 blogger opinions. The blogger sentiment is more bullish than other stocks in the financial sector. AGNC Investment disclosed 42 risk factors in its most recent earnings report. This is a more significant number reported than most companies in the finance and corporate category. The bottom line: financial freedom can be achieved when your passive investment income leaves you with more than your expenses, but the sequence and timing of payments are also essential. Monthly payments are easier to track when balancing expenses and income. Quarterly payments, such as dividends, can make managing your portfolio's gain difficult monthly. The expense frequency of monthly paid dividend stocks matches the frequency of portfolio income payments, making it easy to balance your account on any given month. In addition, many companies that pay monthly dividends offer a high yield. There is the benefit of receiving a monthly payment with an accompanying higher yield. Monthly dividend payers are explicitly appealing to investors who are seeking income opportunities. But not all monthly dividend payers offer the safety that income investors need. A monthly dividend is better than a quarterly one, but not if that one is reduced soon after you invest. The high payout ratios and shorter histories of most monthly dividend securities mean they tend to have elevated risk levels. I would advise investors to look for companies with a high monthly dividend, a reasonable payout ratio, and a fair price.